So while everyone was obsessing over the NFL draft, Wall Street was running its very own playbook. Seriously, it was like a draft day for the world of fintech, with some massive strategic moves being made. And honestly, the winners are already starting to become pretty clear.
You know, the big boards were absolutely buzzing, but not with quarterbacks and linemen. No, they were lit up with acquisitions, huge earnings beats, and major policy shifts. So we're going to break down the 3 picks that are literally reshaping the financial landscape right now: American Express, Nasdaq, and a massive shakeup at FICO.
All right, first up, our number 1 overall pick, American Express. Now, they didn't just play solid defense with their earnings report. They went on an aggressive offense, basically drafting the future of corporate finance with a really key AI acquisition.
To really get why Amex could make such a bold move, you have to see the foundation they're standing on. They kicked off the year with a staggering 11% year-over-year revenue growth. I mean, this is not a company that's playing catch-up. This is a leader just widening its gap.
It was a total blowout quarter. I mean, look at these numbers. Revenue was nearly $19 billion, earnings per share absolutely crushed expectations, and their core business, what people are spending on their cards, was up a solid 10%. They are firing on all cylinders.
But here's the thing. As impressive as those numbers are, they aren't even the main event. The real game changer, their number 1 draft pick, was their acquisition of an AI startup called Hyper. And this is where Amex is placing its big bet on the future.
So what did they actually buy? Well, Hyper specializes in something called agentic AI, and you should think of it less like a simple tool and more like an autonomous teammate. It's an AI system that can handle complicated, multi-step tasks all by itself, specifically the incredibly painful work of managing corporate expenses. And this technology is just so practical. Hyper's AI agents basically act like a tireless intern for any company's finance department. They automatically categorize every single expense, they check it against company policy, they file the reports, and they even chase down employees who are late. This solves a massive, massive headache for businesses. And let's be clear, this is not a niche market. Amex is going after a multi-billion-dollar prize here. The AI expense automation space is already worth over $3 billion, and it's projected to surge past $5 billion by 2030. Amex just bought themselves a key player in a field that's growing like crazy. So the bottom line is this: American Express didn't just have a great quarter. In the same week, they posted record numbers, and they acquired the technology to dominate the next decade of commercial finance. That is a true draft day victory. All right, let's get to our second pick of the day, Nasdaq. Now, if Amex was the flashy first-round quarterback, you can think of Nasdaq as the dominant offensive lineman who just quietly gets the job done, every single play. They are the definition of a quiet compounder.
You see, the Nasdaq that you might think you know, that volatile, transaction-based stock exchange, well, that's just not the Nasdaq of today. The company has completely transformed itself into a stable, subscription-based powerhouse. It's not just an exchange anymore. It's the essential infrastructure that powers the financial world.
And hey, don't just take my word for it. The proof is right here in the numbers. A massive 38% of their recurring revenue now comes directly from software as a service, or SaaS. When you combine that with their other recurring revenue streams, you see a company that's built not on market swings, but on steady, predictable income.
And the results of this whole strategy are, as one source put it, quietly elite. Revenue is up 14%, their high-growth fintech division surged 20%, and get this, their operating margin expanded to an incredible 47%. Nasdaq has successfully rebuilt itself into a compounding machine.
And now for our final pick, which is less about a single company winning and way more about a market-shattering change. For 30 years, one company, FICO, has had a complete monopoly on the most important number in your financial life. And that monopoly, well, it just cracked. Okay, so this has been a long time coming. After FICO totally dominated mortgage scoring for decades, the stage was kind of set for a change back in 2018. But the critical mistake, the nail in the coffin, came earlier this year when FICO doubled its prices. That might have been the final push regulators needed, because in April, a true competitor, VantageScore, was officially approved for mortgages. So why does this matter so much? Because the models are fundamentally different. FICO gives you a snapshot of your credit on a single day. VantageScore, on the other hand, looks at trended data over 2 years. And, crucially, it includes things FICO totally ignores, like a history of on-time rent and utility payments. And the real-world impact of this is just enormous.
By including a much more complete picture of a person's financial habits, an estimated 5 million prospective homebuyers could now have a much better shot at getting approved for a mortgage. This is a structural shift that opens doors for millions of people.
It really just boils down to this. FICO leveraged its monopoly with a huge price hike, and in response, the government didn't just open the door for a competitor, it basically handed them the keys to the kingdom. The game has officially changed.
Whew. Okay, so after a draft day like that, what's our post-game analysis? Let's do a quick recap of the 3 crucial takeaways from all these big moves. Here's what you really need to remember. First, Amex is getting aggressive, building an AI-first future for business finance. Second, Nasdaq has pretty much completed its transformation into a stable, essential, and super profitable infrastructure company. And third, the credit score monopoly is over. It's now a duopoly, and that could finally give millions of people a fair shot at home ownership.
All this action leaves us with one really fascinating final question. With AI becoming a core part of the playbook and these long-standing monopolies suddenly looking vulnerable, you just have to wonder, who's going to be the next #1 pick in fintech? The draft board is wide open.